recording.
Hey guys. Okay, so we're recording. So this is the second phase of the financial course in Core 4. Last week we talked about income statements, burn rates, whole bunch of basic things regarding our business and our personal life. And we had some homework, right? We had some homework to create our own income statement or our own profit and loss statement. And kind of structure the expenses that we have out. I'm not going to go over that right now with you guys. We definitely go over it later on. But today is a slide-less day. I'm not going to use any slides today. Today, we're going to strictly give you tools because Camille and I feel that a massive part of this program is making sure that we equip you with the right tools that you have to continue on with your success. So Camille, can you do me a huge favor and just mute?
Sorry.
Mute? That's okay.
Hold on, because I got to unmute you.
I'll mute myself.
Okay.
We're good. Sorry, it was just ringing in my ears. I'm such a prima donna and said that on the recording. It's all good. Anyway. So today I'm going to show you the dashboard of the budget of for expenses and revenues and stuff that Camellia has and that we use with our clients right now. It's super simple. I'm going to show it to you, and then I'm sure you all have it already. And if you don't have it, we'll send it to you. But we can walk through it. And then we can talk about it. And if you have questions, we can talk about those questions. And one of the biggest things, guys, when it comes to finances is systemizing your finance. It sounds kind of funny, right? And these are super basic things that a lot of times I believe that is common sense, but we don't use it as common sense, right? It's something that I'm like, oh, it's kind of like, Anthony, if you were talking to someone and said, yeah, of course this is how you do a push-up. Like, I don't have to teach you that. Of course you know how to do that. Well, some people don't know how to do it the right way. And some people don't understand that if you do 500 of them, right? Like how to chunk that down or whatever. So what we're going to talk mostly today about is structuring your finances systematically. Does that make sense? Like we're going to pick a day when we're going to view our finances and then we're going to systemize that so that we have it in our calendar, right? And then what we can do later on is, remember, next week we have a Q&A, so we could talk all about this. We can pick a monetary number if we wanted to, and we can reverse engineer things like that systematically. It's all about putting life and your finances into a system so that you don't have to worry about it. We talked a little bit about it last week when we were talking about automatically doing the transfers, right? So think of a system as just, I used to get so confused when people are like, you got to systemize this and systemize that. Just think of it as the way you do something. Just think of it as a process, right? So the way you feed your dog, right? So I'm just going to give you a simple example outside of business, right? So people come when my wife and my family and I, we go on vacation, we have a dog, and we have a sitter that comes to watch the dog, and we literally have a PowerPoint system like a PowerPoint that we print out that shows you exactly how to feed the dog and exactly how many times the dog has to go out. The times, exactly what kind of food, how to do the food, into the bowl, when, all of this stuff. It's just a system because it's a process, because that individual that comes into the house now, obviously, because we've have had the same person for a long time, but the very first time, I always say it's like you have to treat it like a 3-year-old is coming in, and you have to explain it to them like a 3-year-old. So not that any of you are 3 years old, because you're not, but I'm going to explain this to you like you're 3 years old, so that later on when you're doing it, it's so freaking easy. Does that make sense? Sorry, go ahead.
No, I'm just going to add to that, to Gary's point, is that not only, do you want the system and you want to treat it like it's a 3-year-old, but you also want to build the habits. And remember, it takes 21 days for the habit to form. So we're going to ask you today, because we're with you for 9 more weeks, is to, for the next 21 days, follow the system that we defined for each of you today. Right? So starting today's day 1. And like Gary said, we're going to develop a system. We're going to make sure that you know what to do on the weekly basis, but now you have to do it. Build the habit to do it.
Great point. Because a lot of times Camelia has a great term called she says non-negotiable. Like some things are just non-negotiable. This thing that we're going to go over today needs to be a non-negotiable on that particular day that you choose to create, that you choose to do this system or activate this process. Okay. So I'm going to share my screen really quickly here. So hang on one second. Balance sheet. Okay, maybe you can see that. Can everybody see that? Someone give me like a yes or a hell yes. I can see it.
We can see it.
Great. Okay, so this here is a shell. I can't see all of you. So, okay, here. Okay. This here is a shell of your basic balance sheet of revenues, expenses, taxes, all of this stuff. So give me a show of hands if you have this particular shell. Okay, Emma doesn't have it. Jen, you do not have it. Anthony, you do not have it. Sandy, you do have it. Yeah, word? Okay. Okay, sorry. I got to click through to see all your faces. I'm going to go over this very briefly, like a 3-year-old, right? And then if you have questions regarding this, we'll quickly go over this. If you don't have it, I'll send it to you. Camelia, I will send it to you.
Well, just post it in the add it to the Facebook group so you can pull it down from the files in the Facebook group.
Okay, Camelia will post it to the Facebook group so that you can just pull it down from the Facebook group and use it, right? Because now we're going to get into the systems, okay? So real quick, I know we talked a little bit about this last week, but I'm just going to briefly go over all of this stuff here. So here we have budget. And Camelia, if I misspeak on specific things, please just jump right in, okay? We have budgets and we have actuals, okay? So we talked about setting budgets and we talked about the actual expenses and actual revenues coming in and all of that stuff last week. Yes? Yes. Okay. So here are line items. These are called line items. When they're on the left-hand side, line items. You want a line item specific things that you're going to measure, okay? So reoccurring revenue. And mind you, guys, this stuff can change. You can change this stuff if you don't have these specific things in your business or in your life. Okay.
Well, I'm going to jump in, Gary.
Yeah.
What I would recommend you all doing is those 3 categories need to be built out. All right. But you want to stay within those 3 categories. Recurring, which means money that is accounts receivable, money that you know is coming in automatically that month. So if you have folks that are set up on a 3-month program, you know that for the next 3 months, you're going to get $100 from each of them. That's recurring revenue. Okay. New revenue is monies that are brand new. And we'll explain to you how to goal set that number when we're done reviewing this worksheet. Just one thing to kind of, in terms of terminology, the top part is all of your income. And so when we say budget for the top part, we really mean the goal. All right. That's what you expect to generate. The bottom part after that red line is all your expenses, and that's the budget. That's what you expect to spend. You don't want to go over that amount, right? So I just wanted to clarify that piece. So recurring revenue is the accounts receivable, the money that you expect to have come in based on product or services already sold. Now, what I would suggest doing within that recurring revenue is to make sure that you've defined all of your product lines. So if you have boot camp, you have your boot camp recurring revenue. If you have mindset training, you have your mindset recurring revenue. If you have nutrition, you have your nutrition recurring revenue, so that you are tracking specific line items based on your lines of business. Okay. New revenue, same thing. Brand new sales for that month. Same idea. Do it based on lines of business. New bootcamp revenue, new nutrition revenue, new mindset revenue. All right. And if you have different types of mindset programs, so for example, Jennifer, we talked about your VIP and your pro. Track those separately. How many new VIPs? How many new pros? All right. And then retail is all of the point of sale stuff, the retail stuff. So if you're selling product, t-shirts, stuff that comes off the shelves, that you can put as its own line item, because it's not really, unless you want to track, I wouldn't use this as an inventory system. Actually, I would just keep retail revenue lumped as one.
But the reoccurring revenue and the new revenue are super important to line itemize each individual stream, right? Each individual line, because then it becomes a cluster. So you get $50,000 in of money, but you have no idea what brought that money in, right? So the key is to understand where everything is coming from and where everything is going out of.
Now, when you're updating the sheet, anywhere in yellow is where you're going to want to enter your numbers. In red, don't touch. All right, don't touch the red. And if you're inserting lines, insert them within the yellow, and you won't mess it up. However, if you do mess it up, just let us know. We'll help you fix it.
Because you could see when I scroll over the red, it shows I'm pointing, like you could see me pointing here. If you look up into the formula, right, it's already formulated out for you guys, so you don't have to worry about it.
So Gary, let's go ahead and just enter some numbers in here so we can use this as a working doc. So let's just say recurring is 5,000 for January. That's what we expect to get. Our intention is to sell 3,000 in new revenue. So budget new is $3,000, and we want to sell 1,000 in retail. Okay, and again, once we're done the bottom part, I'll explain how you want to get those new and retail numbers in there, the goal numbers in there. But so see it totaled up to our expected revenue for January or for that month, $9,000. Does
everybody see that? So it's already done for you. So the tool has been created. All you got to do is put the numbers in and make it your own on the line item side with new and reoccurring. Cool? Cool. Okay. So now we have expenses out. So what we talked about last week in regards to burn rates, right? So I want to say there's like a lot of different things here, right? So if we go over it slowly, which I always have a tendency of not doing, owner pay, right? Remember we talked about paying yourself first, right? Owner pay goes right into there. What are you getting paid? Taxes for savings. Remember we talked about taxes. $1,000 in doesn't mean you get $1,000.
Can I interrupt for a second?
Please.
So the owner pay is important because you have to make sure, like Gary just said, you pay yourself first. But your question might be, well, how much do I pay myself? Right? How do I know what to pay myself? If you look down at the bottom, there's two sheets on this workbook. One says 2016 business and one says 2016 home. So we've built you a worksheet for your home personal stuff as well. What I would suggest doing is do the home first, because if you know what you need to spend on in your home life, you'll know what you need to pay yourself. All right, so if you fill all of this out with whatever it is that you're going to budget for yourself at home. Now remember, these are expenses that you will not deduct from taxes. Anything that's going to be tax deductible goes on the business side and comes out of your business account. So these are things that do not get tax deducted. So fill that out, and Gary, maybe we can just put some numbers in there.
Yeah. Okay.
Don't worry about salary yet. Let's just put.
Okay. So we'll just say, okay, in your savings account, every month you want to put $1,000 in your savings account. Groceries, you spend $500 on groceries, right? Dining out, if you're not talking about business, right? Because if you are talking about business, then we put that in the business one. $400. Health insurance. God, how much do I spend on health insurance? A gazillion dollars. It's $3,000, right? So Netflix is like $8, right? So then you scroll down, and there you go, right? So here, where my cursor is now at the total expenses, it shows the total number, right? Which is $4,908. Right below that, remaining, you're in the red. Those parentheses around that number mean that it's negative, right? Because we didn't put anything into the salary yet, right? So that's a negative number. So that means you're in the red, $4,908. Make sense to everybody? It's super easy, right? And last week we talked about going back into your statements, into your bank statements, and into your credit card statements to look over exactly where your expenses are coming from. This is how you do it, right? You go back and you highlight those items and you put them into here. I cannot tell you how many people I coach that have a lot of different businesses that don't do this. And once they do it, clarity strikes their brain and they're able to understand what in the hell is going on. This is a very, very simple exercise that so many individuals look past simply because, as we talked about last week, they look at the number on their bank at one point in time and say, that's how much money I have. But that is not a true value. That's not a true valuation of the actual numbers that you have. The true valuations are here, right? Because you're tracking them all. And the beautiful thing about this, right, is that you have every month here on one sheet, on one spreadsheet. So you're not creating, another spreadsheet every single time, right? Super simple. It's super simple. Does anybody here right now think that this is not simple and that has a question in regard to this? Please raise your hand if you do.
Well, we're not done yet.
No, I know we're not done yet, but we're not even close to being done. But in regards to just going back into your bank statement or going back into your credit card statement and putting the numbers into the cells required. Okay.
So by doing what Gary just did, he came up with that $4,900 number, which means that you have to pay yourself at least $4,900, right? So we'll put the salary number right where you are, Gary. Go ahead and put the salary right there at $5,000. Let's just call it $5,000. And now we can go back to the business sheet, and we know that we have to be paying ourselves $5,000. Okay, so they're linked. Take that total personal home expenses, that's your owner pay, and that owner pay is your salary on that sheet. See the link? All right, good. So let's go back to the business one now and let's finish up the business.
Okay. Does that make sense, everybody? Yeah? Okay. Okay. All right. So let's work our way down. Let's work our way down the spreadsheet from the top. Okay. So we've talked about the reoccurring, the new, and the retail. Everyone gets that, right? So transfer from tax saving and transfer from savings. I'm going to let Camelia just give her gist on exactly what that is. And then I'll just chime in really quickly on my end.
Well, if let's first continue with the expenses and circle back around to that. And there's a reason why I want to do that. So as you're going down here, remember we talked last time, pay yourself, tax savings, savings. Those are the three things you must fund each month. So let's just say it's $500 for taxes and $500 for savings, right? And now if you're doing retail, this I call cost of goods sold, Gary, not cost of goods, not cost of service. I use this line item as if you're selling product, you have to make inventory of that product. So let's just say, we want to sell $1,000. We need to purchase $500 worth of inventory to sell it. So that's the cost of the retail that we're selling. So $500 there. And then,
real quick, I'm going to interrupt you really quick. I'm sorry. When Camelia said it's not she called it cost of goods sold and cost of goods service, and I called it cost of goods services last week. It's cost of goods sold as the product. When you have a product, any product, when you build a pen, it's the cost of the good to build the pen. Do y'all get that? What does it cost you to manufacture this? What does it cost you to manufacture this? The only cost of goods service that I do is when it comes to the actual margin of the service provided, not the product. Does that make sense? I hate saying that. I shouldn't say that anymore.
I know that's confusing stuff, but maybe I can make it just a little bit less confusing. Let's say you sell Advocare, all right? And it costs you $10 to buy a can of Spark, right? And so you're going to sell at retail in your store. So you need to get the Spark in your facility. All right. So we're going to buy 50 cans of Spark. It's going to cost me $500 because it's cost me $10, right? Did I do that right? 10 times, 10 times, whatever, $500 worth. But now I'm going to turn around and sell it. And my anticipation is to sell it for $20 a can, and I'm going to make $1,000. All right. We have to account for the product cost as well as the product revenue. Okay. All right. So then the rest of these expenses, they're pretty self-explanatory. We can scroll. Let's just get down to obviously your bank charges. Those are the fees for collecting money. You're always going to get that. That you're going to have to kind of estimate based on how well your business is doing. The more you make, the more you pay in bank charges, unfortunately, although I think I have merchant account fees in here as well, not just bank charges. Meal and entertainment, let's give us a budget of $250 for meals and entertainment. Remember, now this is what is going to get expensed. It's deductible. Office expenses, $100. Keep going. Okay, let's scroll so we can see the payroll expenses totally. All right, so payroll is a big one. Sometimes it's contract fees. Sometimes it's payroll. If you don't have actual employees, then it's going to be contractor fees. If it's employees, you'll call it payroll expenses. We want to separate the payroll expense by the tax component and the wages component. It's just easier for accounting purposes. So again, go back through what your payroll has looked like. Let's just say we're paying $3,000 out in wages and $1,000 out in expenses. Don't put it in the payroll expense. There we go. Taxes is $1,000. The payroll expense tax, yep, that's $1,000, and the wage is $3,000. Okay, there's two components, obviously, to the payroll piece. Rent, got to pay rent. Well, some of you don't have to pay rent, but if you have a brick and mortar, you pay rent. It's $2,500 for rent. And let's scroll on down and see what else we need to put in here. Telephone, $100. Professional development, always good to develop yourself, $500. All right, and now let's scroll so we can see all of these last few line items. Okay, credit card 1, credit card 2, personal loan. Now, one thing, and I think we talked about this, that you have to keep in mind is if you are paying all of your bills on a credit card and paying that month off, that credit card bill off each month, don't include it on here. This is just for debt pay down. All right, and be careful that you don't double book, because that'll happen sometimes. Folks will double book. So they'll put a meal on their credit card, and then they'll have a receipt, and they'll look at the receipt and put it in as a meal expense, and then they'll pay it off on their credit card as well. So be careful that you don't double book expenses, that when you put them on a credit card, if you pay your credit card off in full each month, you don't have the debt. If you have debt that you're paying down, that's what these line items are for. Okay, so let's just say I've got one credit card and it's $250 that I'm going to pay down each month to get it to zero. All right, we all good with this so far?
So that can be confusing. Go ahead, Jen.
Yeah, hold on, Jen.
So, so the way I do this on my books today is I have one credit card in my big statement, and I will go through my credit card and code it to, entertainment, subscriptions, cell phone, all these different line items that you've put on here. And in the past, I paid off my credit card. I was able to, but when I don't, could I continue doing that and then call this line item my, what do you call it, finance fee for not paying it off? Because if everything else is allocated
Yes.
in the expenses, does that make sense?
Yes, but then the next month, you have to account for the amount that you didn't pay off that you're now paying off.
Right.
Okay.
Right.
It would be accounted for in the line items, as long as I cover everything, either divide it up among all the expenses, right?
Well, let's work this through. So let's just say, and I'm going to keep these numbers really simple.
Yeah.
$10 for meals, you had $20 for gas, and you had $50 for your phone. Okay. And so you itemize those on here,
Mm-hmm.
right? But you only paid off $30. So there's $50 still left to pay, right? So you're actually not even going to get charged the finance fee in that current month. You're going to get charged it in the next month.
Mm-hmm.
So you would have to put in the next month the finance fee, because it's going to come out of your next month budget, but you also need to account for the $50 that you didn't pay off. So if your finance fee is $25, then the credit card payment becomes $75 for the following month.
Does that make sense?
Yes.
Does that answer your question?
I think so. Then my question, which we don't have to derail, is kind of like, when you'll get to this, right, is when you want us to start this whole process. Like, do you want us to start it today, or do we go back to January 1?
No, I want
like
you
the beginning of our tax year. Do you know what I mean?
We'll talk about that as we go through the system. Yeah, absolutely.
One thing to just roll into what you were just saying, Jen, in regard to the credit cards. Revolving debt, unless it's a huge number, can be a real big pain in the butt, right? Unless you're dealing with hundreds of thousands of dollars and millions of dollars, revolving debt is a pain, right? Because then finding what those finance charges are for that one, like, it's a pain in the butt. So if you could ever just not have revolving debt and figure out ways to pay that debt down as soon as you possibly can, you know, like, that's the best way. Again, on the low end, when you're dealing with millions of dollars or hundreds of thousands of dollars, it's a totally different thing. You need that revolving debt. But on this scale, if you can pay that stuff off as quickly as you possibly can.
Yep.
Okay. And I'm sorry I interrupted. Go ahead.
No, that's fine. Stay down there. Please go back down. So we've itemized all of our expenses, and now we see that we're in the hole, $5,000. So I talked about how we're going to use our expenses to identify our goal for the month. And what this is telling us is that we need to generate $5,200 more in new sales for this month. So what we want to do is go back up to the top and add $5,200 to our new revenue, which makes that $8,200 right there. And that is the goal that we've now set in terms of revenue that we need to generate. And now, which we'll teach you in a later lesson, we'll figure out, well, how the hell are we going to generate $8,200? And how do we know that we've got enough leads and sales and everything to generate that money? Okay.
And that comes in a later lesson. But this part here, guys, I don't want to say the wrong thing, but I'm going to say it like I say it. Okay? If you look at this and you don't do this, right, you're losing the game. If you do it and it makes you sick to your stomach, then it makes you sick to your stomach that day, then we figure out how to increase the sales. But it's better to have that feeling and know exactly where you are, than to think you know where you are, but you have no idea where you are.
Okay, so those last two items that we talked about, transfer from tax savings and transfer from savings. So we're about to talk about the system to completing this thing, but one of the things you will have to do is pay taxes. Whether you pay it annually, quarterly, whatever, you have to pay taxes. So in the months that you're paying taxes, you are going to, Sandy, I see your hand. I didn't know you could do that, but we'll unmute you in a second. In the months that you're going to pay taxes, we're going to transfer money out of tax savings that we put $500 into and incorporate it as revenue, right? It's income. We've been saving it just for this purpose. Now we get to add it to our revenue line item because we don't have to generate more sales to pay off our taxes. Hallelujah, we saved it all along. Okay? And in those months where, let's say you have a big purchase, you know, you want to buy some new equipment, or you want to go take a trip, go to a seminar in Fiji or something, right? And you've been putting money aside in savings to do that. Or if, by God, some month is just a bad month and you need to go into that rainy day fund, that's where the transfer from savings comes into play, right? So if you have to take $1,000 out to savings for that month to cover it, that's where you incorporate it as income into your revenue. Because what we don't want to do is force you, if you could show us all of the income lines, Gary, is force you to have to generate new revenue to meet your expenses, as they might have to do with taxes or those expenses that you are saving for. So that's what those line items are for. Sandy, hold on. I'm going to unmute you right now. Okay, go ahead, Sandy.
I don't understand why you're adding new revenue when that's revenue that hasn't essentially been earned yet into the spreadsheet. I mean, you can see what you're short of. So,
remember, we're in the goal column, the budget column. All right.
Okay,
this is our intention. All right. That's why it's in that column. We haven't put anything in actuals yet. We've just set this up for the beginning of the month.
Okay.
Okay. All right.
So you know
Now,
where you're going.
to Sandy's point, all right, now that we've got this all set up, we have our shell. And we can actually take this and copy it. I would actually take the expenses part and copy it to each of the months, because this is our shell. The expenses shouldn't change much, but I'm going to qualify that later. So the next thing to do is to develop the system, right? How do we track where we are in terms of income coming in and expenses going out? And that's where we're going to do this on a weekly basis. You're going to go into your bank statements and you're going to go into your credit card statements, and each week you're going to record the actual revenue earned. So what recurring came in and hit the bank account, what new sales did you have that hit the bank account, and what retail did you sell and hit the bank account. And you're going to record this each week. And the same thing with your expenses. You're going to go into your bank statements and your credit card statements, and you're going to record all the expenses that you paid on a weekly basis. And that, Sandy, is where, now you're tracking what has actually happened. And you're going to track it according to what you expect to happen. So if you are in the third week of the month and you realize that you've spent $500 in meals and entertainment, you're like, oh shit, no more meals and entertainment for me this week. I got to cut that out. Okay, it's a budget, and you have to use it as a budget to manage your money. If you get to the third week and you realize, all right, I've got my recurring revenue, that's awesome, everybody's paid, and I'm at $5,000 in new revenue, all right, I'm going to hustle this last week and generate the extra money that I need in new revenue to meet my goal. So you always know where you stand financially. And the same thing with your home. Do the same thing for your home. Okay, that's so important. This is the habit that we want you to get into every week. And so I'm going to unmute everybody in a second, but first let's talk about Jennifer's question. How do we do this? All right. I think the best thing to do is, we're at July 1. It's the second half of the year. We're going to start with July. Okay. But what we want you to do is to go back 3 months, 4 months, and let's get a history of what's happened so we can use that to set up July. All right, so take a look at all your revenue streams, get an average of what you've generated revenue-wise so we know, but more importantly, the expenses. Go back and look at all your expenses, figure out what you've spent on a monthly basis, set the expense items so we know what your revenue needs to look like to cover the expenses. And we're going to look at this, and if there's not any numbers in rows 16, 17, and 18, you're fired.
Because you're not in business to not make money, guys.
You're not a charity. Do this for your business and do this for your home. Okay. Then for the rest of the year, July through December, start with the big rocks, because there's expenses that happen once a year. Put that into the appropriate month. And then what do you pay, like, I don't know, insurance payments, workers' comp or business insurance, right? Maybe you pay taxes annually, maybe you pay them quarterly. Start with the big rocks. What do you pay annually? What do you pay twice a year? What do you pay quarterly? And then you've got what you pay monthly. Put those in so you have them from July to December. Are you taking any vacations? right? Do you have any seminars coming up? Is there any travel that you need to incorporate? Put those into the appropriate month, July through December. Because not only are we using this as a budgetary tool, but it's a forecast as well. Because now we're going to be able to look at the coming months and know exactly what our financial future looks like. Okay, we'll be able to say, oh, we've got that payment coming up. I need to get more of my savings to accommodate that payment. All right, so I need to sell this, so I probably want to up my advertising and my marketing so I can generate more leads and drive more sales. It's all linked together.
There's a million reasons why, right? There's a business deal that you want to do, right? There's a great opportunity, right, Anthony, that I want to get into, but there's a gazillion reasons why you need to do this stuff. So just like Camelia said, if it's not done, then what is the point, right? This is generated so that you all can have tools that we know factually, not theoretically, not philosophically, factually work. So you do these things, you will factually have a better understanding of where your life and business is going. It's a huge deal. It's a huge deal. And creating that habit, like Camelia said, that system now that we said earlier, we're going to create the system. That system is every week. That's that 3-year-old system. Sounds so simple, right? Okay, I got to do it every week. Every week.
Okay, so number 1 step is to download the sheet. Okay. Number 2 step is to make the categories your own. So customize the categories, and that's everything that's in column A. Number 3 step is to review at least 3 months of data to get your numbers. Number 4 step is to input home expenses. All right. Number 5 step is to input business expenses. And of course, now you know what the owner's salary is going to look like because you've done your home expenses. All right. And that gives you that numbers. Keep going. Number 6 is input your recurring revenue numbers. And if you don't know how to get or what your recurring revenue numbers are, just let us know and we'll help you figure those out. And then number 7 step is to record the big rocks from July to December.
Seven steps. Anthony had a question that just sent me a thing. Anthony said, can I have my accountant do this for me? And then after Anthony said, after you do the line items yourself. I would say, and Camelia, correct me if I'm wrong, we might have 2 different viewpoints on this. I myself do this myself for my home, right? I'm meticulous. Like it's like an obsession. It's just fun, right? Like I do this myself for home, right? Because it gives me such clarity on things that are important to me, right? So I would say for your home, take care of it yourself. I would say for your business, right? You have got to know what these actuals are. That's what the budget and actuals are for, so that you can understand that. If you're paying your accountant or if you have a bookkeeper to do it after, I would say you could have, to have your accountant do it is going to be expensive, unless you have an accountant that works for pennies. But I know my actuals in business because I did them myself, and I sit down with my bookkeeper to go over all of this stuff all of the time, right? So I don't, on my business, actually type the numbers into it. She does it because I pay her for it, but then I sit down with her to go over it. But if you don't have someone to do that, you do that yourself, because these numbers are vitally important to the lifeline of your business. You've got to know them.
I totally agree with what Gary just said. To have an accountant do this is expensive. If you have a bookkeeper, sure, have a bookkeeper do it. However, if you're not reviewing it weekly, then don't have the bookkeeper do it. Doesn't make sense.
At all. At all, because then you don't know what the hell is going on. So, does anybody have any questions before I stop sharing the screen? No? Okay. So I'm going to stop sharing. That took a little bit longer than I thought it was going to take, which is okay. We will talk, answer some questions next week. Some things that I did that Camelia and I wanted to chat about today was we wanted to make sure that you understood that spreadsheet and how important it is to put that spreadsheet into a weekly system and make it a habit for yourself. It almost sounds silly. Again, like I said before, it sounds silly to talk about it over and over again. But if you don't talk about it over and over again, we tend not to do it. The people that make no money tend not to do it, and the people that make $1 million trillion a year tend not to do it. It is absolute that you know exactly what's going on so that you can have a better understanding of where you're going and see exactly what you want to do. Right? It's super important to create that system, and the system is the process of doing it every single week. Pick that day, that week, and make sure that you get it done. And we'll review it. That's what this course is about. It's not just a curriculum, it's a coaching course. So we're going to review this. Okay? You're going to let us know. It's important. Other things that we wanted to just chat really quickly about today were specific relationships that you guys should have with certain individuals. Your banker, right? If you have an account at a bank, there's not the bank teller, there's someone who opened the account for you, right? That person is called the banker. You want to have a good relationship with that banker, because that banker can help you get those lines of credit that you may need at certain points. That banker can help you with a lot of different things that you may not realize. There's a lot of there's a lot of things that fly under the radar that you may not know about in regards to merchant accounts, in regards to taxation things, in regards to where you can put your money so you don't get taxed on your money, right? Your banker can help you with that. So it's really good to gain that relationship with your banker. That's a very important thing in my life, and I know it's an important thing in Camilia's life. It doesn't matter how much money you have in the account. It matters that you're building the relationship with that individual. That's a key thing. So if you don't have that relationship with the person at your bank, I would say go introduce yourself to that person. Tell them what you're doing. It could kind of feel funny at first, but it's an important relationship down the road to have. Do you want to comment on that, Camelia? No. Accountant, you need an accountant, right? And remember, these names, like these titles, accountant, banker, screw the name. Don't label the name, right? They're people that are going to help you. So you interview those people. right? You need them to help you, right? So your accountant, you want a good accountant. You want an accountant that's going to help you with your business. You want to be able to talk to that individual and throw ideas through that individual so that they can help you with stuff. I hear so oftentimes, my accountant didn't tell me this. So how was I supposed to know? Well, do you even know they talk to their accountant, maybe never, right? I emailed my accountant at 1:30 this morning for a question that I had, right? Like, those are just relationships that you should really start building with people. You need an accountant, you need a banker, you need an attorney, right? You need someone that you trust that is an attorney. These are just regular people, right? There's no hierarchy of any individual. I used to think that there was. I used to think I can't talk to an attorney. Well, they're not going to pick up the phone if I call them. Call them. Tell them what you're doing. See how they can help you. And then once you have these relationships, and I can tell you firsthand, if you don't have these relationships with these people and something happens, you're going to lose money. If you have relationships with these people and something happens, you're going to either make money or be okay. That's a fact. Again, that's not a theory. That's not philosophical. That's a fact. If you don't have relationships with these people, they're not going to take that extra step to help you during certain situations that are going to come up in your life. Did I miss anything in regards to relationships, Camelia?
A lawyer.
Well, an attorney. Lawyer, attorney. Super important. Super, super important. So today's class has no slides. It's recorded. And we record them for a reason, so you go back and see them, and we give you tools so that you can use them. Please review the class. Please review the class, rewind, watch it again, take more notes, right? And use the tools, create the systems, make it a habit. Finance and money, right? I'm going to say money, 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 money. If anybody has, I am going to say this on a recording. Has anyone seen the movie? I don't even remember what the movie was. It was an old football movie when I was in high school. I think it was called, I don't remember. It doesn't matter what the movie was called. But they talked about uncomfortable situations. And they were like, penis and vagina. No one likes to talk about penises and vaginas. So they were like, penis, 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 vagina, vagina, vagina. Nobody likes to talk about money. It's not a bad thing. It's not a bad thing. You need it in order for your business to run, right? So it's okay to say the word money. It's okay to track your money. It's okay to make money. All of that's okay. You're not lusting over this stuff, but it's a vehicle. If you don't have that vehicle, and if you don't know where the monies are coming into your business and into your home, then you basically kind of are losing at the game of business. And we don't want you, nor do you want to lose at that game. You want to win because you get one life, guys, right? You might as well make the best out of it. And sometimes planning things like this are such an important part to having that better life. Sometimes it's like we want to just be free and not worry about this stuff. Well, you'll be free and not worry about it once you understand and get this stuff done, right? That's what makes you free. It's not not worrying about it. And I'm a free-spirited individual and I can just go about doing whatever and screw everything. That creates anxiety. But once you actually have the plan, structure, system down, then you're a free-spirited individual. Then you do whatever the hell you want. Right?
Okay, just real quick. Jennifer, when is your review date and time
For
reviewing your financials?
ironically, I just sent, I've got my little binder of my monthly statements, because usually what I've been doing is tracking it on a monthly basis and sending it into my bookkeeper. So I can take this spreadsheet and like Friday.
Good. Friday AM or Friday PM?
Let me
So you
think.
love how she does that?
Actually, you know what? Does Thursday morning work at 8 o'clock my time or
There's
something?
no right or wrong. It's whatever works for you. So if it's Thursday at 8,
Yeah.
good. Okay. Awesome. Emma?
Friday.
Friday
Friday.
AM or PM?
AM.
Okay. That's when I do mine, by the way. Sandy, when is your
I do mine Sunday afternoon.
perfect?
Sunday afternoon.
Excellent. And then Anthony, you and Forrest really do this together. So I know you have to talk to Forrest, but when would you, in your mind, what's the most ideal time for you guys? Do you have a weekly meeting that you've defined yet?
Yeah, we meet every single day, but Friday at 11 a.m. would be good to focus in on the money. That's it.
Okay.
You know, not anything else, just the money.
Perfect.
So I'm just going to say, I'm going to add to that, if you don't mind, Anthony, that when you do talk to Forrest, send Camelia and I a message saying this is because that might not be a good time for him, but we want to know the exact time and day.
Yes, sir.
Okay?
Yes, sir.
That's the beauty of accountability, guys, right? Creating that system too.
Mm-hmm.
All right, now I'm going to ask another question. Obviously, we talked earlier that we were going to load this into the Facebook group as an Excel file. If any of you want to take this a step of accountability a step further, can absolutely, I have this in a Google Doc, a Google Sheet. We can absolutely have it as a Google Sheet and share it so that Gary, myself, and you can review it together whenever you want to. Versus you keeping it on a spreadsheet, we can do it as a Google Doc. And of course, that means that Gary and I can look in on it at any time and make sure that it's updated as well. So if you want to take your accountability a step further, raise your hand and we'll be happy to do that. One, Emma. Okay, all right, good, perfect.
And Camelia, I'm also going to send, Jen, I sent you the accountability structure the other day, right? Did I send that to you?
Yeah.
Yeah. Okay. I'm gonna send that to Camelia so Camelia can load that onto the Facebook page.
We're going to
And
teach
that will
you how
help.
to load things onto a Facebook page.
Camelia is the boss, not me.
All right, good. So you'll get an email that says that your document is on Google and click to share. And you'll get that I'll get it done. Today's Tuesday, so you'll have it tomorrow. It's already created. That's easy to do.
And then, guys, next week is a question and answer week. So we want you to come with all of the stuff that we gathered from last week and this week so that we could actually dive into your personal space and talk about it next week. Okay? Because we want to make sure that you're doing the things that are important. Okay? I think it was a great call this week, guys. It was a great call.
Any leftover questions? All right.
Jen?
I would just say thanks for recommending that book, Profit First. I started reading it, and I feel like that should be required reading for everybody 12 years and older.
Yeah.
I think I'm going to get my kids reading it.
It's a great book.
Yeah.
Great book.
And you know what, Jen? We can add that assessment piece to your spreadsheet because I built that for some
It's happening.
and it automatically calculates and updates the percentages for you, so you always know where you are in terms of your actual percentages and your goal percentages.
Yeah, and if anything, just for those who haven't read it, it made me feel a lot better that my practices. You know, I'm not an idiot. Yes, I can sell, but you know, we self-sabotage. You know, like you do feel like, holy cow, how have I been so whatever? And then you're like, okay, I'm not alone.
Mm-hmm.
Perfect.
I'm just going to get better.
Forrest, Anthony, perfect.
Yep. Good call.
When I load the recording, I'll outline the 7 steps again of what to do. But listen to the recording again too. It'll give you more information. Okay.
All right, guys. Have a great week.
Happy 4th of July. We are on for next Tuesday.
We are. All right, crew.
Bye.
Peace out.